Hello and welcome everyone to our financial and economic analysis of Apple Corporation. In today's analysis, we will show you how Apple increases shareholder value through substantial stock repurchases. And here's how. First, Apple's net income has increased almost threefold between 2013 and 2022, from $37 billion to $100 billion respectively. And as we've discussed in a previous presentation, we are forecasting Apple to earn $106 billion of net income in 2023. The big bump between 2020 and 2021 was spurred by COVID-19 causing lockdown consumers to buy iPhones and laptops and surging demand in China. Second, Apple returns net income or equity to its shareholders principally through two mechanisms. The first mechanism is that Apple pays a quarterly dividend, which is noted at the bottom of the bars in black, and has averaged around $15 billion per year over the last 10 years. As you know, dividends are cash payments that go directly back to shareholders. The downside of dividend payments is that they are typically taxed. This results in what is known as double taxation. Double taxation occurs when Apple's earnings are taxed at the corporate level and dividend payments are taxed on the individual investor level as well. The second mechanism is that Apple repurchases its own stock in the open market, which is noted at the top of the bars in gray, and has averaged about $85 billion in repurchased in 2021 and 2022. Stock buybacks result in fewer shares of stock trading in the marketplace, which in turn increases stock price if demand for stock remains constant. The double taxation issue is one reason Apple uses stock repurchases to reward shareholders. Accordingly, Apple's returned an astounding amount of equity to its shareholders in the form of dividends and stock repurchases. In total, between 2013 and 2022, Apple has repurchased or dividend about $675 billion of its own stock. Third, Apple's stock repurchases have resulted in outstanding shares of stock in the marketplace decreasing by 40% from just over 25 billion shares in 2013 to just over 15 billion shares in 2022. As we've discussed in a previous presentation, we expect Apple to continue to repurchase stock, resulting in 15.6 billion shares of outstanding stock in 2023. Fourth, the result of Apple's increasing net income and decreasing number of outstanding shares has been to increase earnings per share by 325% from $1.42 per share in 2013 to $6.05 per share in 2022. EPS, or earnings per share, is simply the income of the company divided by the number of its outstanding shares in the marketplace. This is an impressive rise in earnings per share, and as we have discussed in a previous presentation, we are forecasting Apple to earn an additional $6.79 per share in 2023. The stock market looks at earnings per share as a leading indicator of a company's profitability. Accordingly, Apple's substantial increase in earnings per share has translated into a substantial rise in Apple's stock price from around $20 per share in 2013 to around $150 per share as of September 2022. And again, as we've discussed in a previous video, we are forecasting Apple's stock price to rise to $187 in 2023. In conclusion, when Apple buys back its own stock, it reduces the number of shares outstanding in the marketplace. This helps boost earnings growth since each remaining share captures a greater percentage of Apple's earnings, and higher earnings typically lead to a higher share price over time. Thank you for watching, and please subscribe, like, comment, and share. Please also pause this presentation and review this disclaimer before you acquire any stock.